are Grace Kennedy, a company rooted in Jamaica and trusted around the world.
We care about the people we serve, our customers, our communities, and each other.
In every product, every bite, every money transfer, and every transaction, we deliver with heart, with pride, and with purpose.
Powered by over 2,000 dedicated team members across the globe, GraceKennedy is driven by people who are committed to our vision and who embody our core values: honesty, integrity, trust, commitment, humility, and respect.
Our food brings families together, from Jamaica to the diaspora and beyond, with the rich, familiar flavors you've loved for generations.
From farms in rural Jamaica to carefully crafted food products made in our manufacturing facilities across Jamaica and in the UK, then onto supermarket shelves and dinner tables around the world, Grace is there.
We're championing culinary innovation and investing in agricultural resilience, all while delivering consistent quality and taste. Our financial group helps dreams take shape, supporting families and businesses with reliable, seamless, consumer-first solutions.
We protect what matters most, offering you peace of mind through every stage of life. We bring people closer together across borders, making it easy to support loved ones wherever you are. With innovations like our GK1 app, Jamaica's #1 digital wallet for remittances, staying connected has never been easier. We help our clients manage their money, grow their wealth, and build their futures.
With over 50 subsidiaries and operations spanning Jamaica, the wider Caribbean, including Belize and Guyana, and key markets like the USA, Canada, the UK, and Europe, we proudly serve vibrant, diverse communities worldwide.
Through our trusted brands and dynamic businesses, GraceKennedy continues to grow our reach and deepen our impact. From humble beginnings in Kingston, Jamaica in 1922, our over 100-year legacy is the foundation of a bold, purpose-driven future.
A future led by our amazing team, anchored in award-winning corporate governance and driven by a purpose that goes beyond profit.
We have a deep commitment to giving back. We champion education, youth, community development, nation building, and sustainability.
Because we are deeply invested in the future.
That's why we have invested in a bold and dynamic environmental, social, and governance strategy rooted in our We Care ethos and focused on good governance, people, environmental stewardship, community upliftment, and responsible products and services.
We are building the next generation of great leaders by creating opportunities, fostering growth, and nurturing a culture of continuous learning and engagement. We lead with respect and humility, inspiring pride in everything we do.
We envision a future where GraceKennedy is the #1 Caribbean brand in the world, delivering more products and services in more places with the same trusted quality.
Across the globe, we proudly share the best of Jamaica with care. Because to us, this is more than a business.
It's about building strong relationships with our thousands of shareholders worldwide. It's about upholding the highest standards of integrity for those we serve.
It's about protecting the planet we all depend on. It's about empowering our people and uplifting the communities we're proud to be part of.
It's people.
It's purpose. It's GraceKennedy.
We are food.
We are financial services.
Nous sommes mondiaux.
We are family.
Somos multiculturales.
We are.
We are
GraceKennedy.
afternoon, or good evening, or good morning, depending on where you are in the world. Welcome to Grace Kennedy's Investor Briefing. I am Frank James, Group Chief Executive Officer. With me is Andrew Mesado, our Group Chief Financial Officer. I want to welcome all participants who have joined us for this webinar. This briefing has been scheduled to run for approximately 90 minutes. We will use 45 minutes of this time for presentations and the remaining time to accommodate your questions. So we welcome your sending us questions. During the question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. Let me repeat that. You can email us your questions at gkinvestor@gkco.com. You may also call or send a text to our communications team at 876-809-1121 or 876-537-1950. So that's 876-809-1121 or 876-537-1950. We welcome your questions. All right, so we're going to jump straight into the presentation for our investor briefing. I want to start by giving you an update on some governance and leadership changes. We continue to believe that strong governance and leadership is key to us meeting our strategic objectives. And in that regard, I'm very pleased to advise that we appointed late last year Jackie Wright to the GraceKennedy Limited board. Jackie is a phenomenal Jamaican who has been doing great things on the global stage. She has held senior leadership positions in global organizations such as Microsoft, BP, General Electric, and most recently was leading the IT charge at McKinsey & Company, leading their global IT strategy, including areas such as artificial intelligence. So we are very pleased that we could have this very phenomenal lady joining our board, and she has already started to have an impact at our board meetings. So welcome, Jackie. We also had some leadership changes which have really been made to align with our strategic goals and objectives. In particular, we would have advised of a number of changes last year, but these I wouldn't have mentioned yet in our investor briefing. So I'd like to advise of the appointment of Tamara Glaves-Husey, who is heading our general insurance business, and you'll see that under that falls GraceKennedy General Insurance, Key Insurance Company Limited, as well as GraceKennedy Insurance Eastern Caribbean. We have Shaluk Richards, who heads our health and life insurance business, and within that we have our GraceKennedy life insurance businesses, which are in about 13 countries around the Caribbean, as well as our Canopy insurance business, which is here in Jamaica. Also very pleased to advise of the appointment of Derval Williams earlier this year as our new Chief Audit Executive. So we continue to have a very strong executive team that will be driving the future growth of our business. So a few awards and recognitions. We would have been sharing some with you throughout the year, but want to update you on a few more. We continue our push with sustainability, and we continue to be very pleased that we have been recognized by a number of entities, the Jamaica Manufacturers and Exporters Association, the Vision 2030 Corporate Social Responsibility Award, and also the Jamaica Chamber of Commerce, where for the second consecutive year, we won the JCC ESG Award, as well as GK General Insurance being recognized as Best of Chamber in the large category. We continue to gain Fine Food Awards in the UK, and we continue to be very pleased with our performance, especially in the area of sauces, seasonings, and spices in our UK business. We ended the year on a high where we won the top award from the JSE Best Practices Awards, the Governor General Award for Excellence. Very pleased that the team was able to bring home this award and a number of other awards from the GSE Best Practices Award, which we're very pleased with. Also very pleased with CARICRIS that increased our rating for our overall management risk from strong to highest. So we are now at the highest rating for management, which really reflects the view of strong governance and leadership of the GraceKennedy Group. So your company continues to be award winning, and we look forward to continuing that trend in 2026. We also took time during 2025, importantly, to honor Don Webby, our late former group CEO, and a number of activities throughout the year where we were able to really recognize the tremendous contribution that Don made, not just to GraceKennedy, but indeed to Jamaica and the region. You will see where one of his very favorite activities, Champs, we were able to recognize him there. And later in the year, the Jamaica Stock Exchange also recognized him, admitting him into the inaugural, actually it was the inaugural award for the CEO of the Year, and then the PSOJ admitting Don into the prestigious Hall of Fame. The highlight for us at GraceKennedy was at the end of the year when we renamed or announced the renaming of the GraceKennedy headquarters, the Don Webby Building, and on our 104th anniversary in February of this year, we actually did the unveiling of that. So you'll see that picture there. Our headquarters, which Don spearheaded the establishment of here at 42 Harbor Street. We think it's very fitting that we have renamed this in his honor. How did we do with the numbers for 2025? Well, the group continued to show strong growth in revenue. We were able to deliver an increase of $10.7 billion in our revenue, taking us to a new high of $178 billion. So we're very pleased that we continue to grow the top line, and you'll hear further on some of the key drivers behind that. In particular, our international food business that continues to do well as our insurance business. The food business continues to be the dominant driver of revenue for the group, and behind that is our insurance business as the second largest contributor to revenue. Where are we generating these revenues? So if we look at it, our Jamaican business continues to be the lion's share of our revenue at 56%. But this is actually down from 58% in 2024. Now, I need to make it very clear that this is not because Jamaica is declining. Jamaica continues to grow. So we grew our revenue in Jamaica, but because our revenue in our international markets grew faster, then you're seeing the percentage share from Jamaica coming down somewhat. A lot of that growth, as I mentioned, came from our international markets, in particular, our two primary international markets, North America and the UK and Europe. We saw double-digit growth in our US market, double-digit growth in our UK market, and we also saw growth in our Canadian market. So you'll see that the share of revenue has gone up for North America from 24% to over 25%, and in UK and Europe from 11.5% to 12.2%. So we continue to grow in Jamaica, but we're growing faster in our international markets. What about the segments? We're seeing where 3 of our 4 segments showed growth in revenue. We're seeing the food segment, as I said, the key driver of revenue, growing 6%. Insurance saw some strong growth at 17%, and our banking and investments growing 4%. You'll notice that the one segment that we saw the decline in revenue was money services. And so let me spend a little time on that. As I've shared with the public before, the global remittance industry is going through significant change. And what that means is that the price for sending remittances is actually coming down, which is not a bad thing. It means that our customers will find it more cost effective to be able to send remittances around the world. But what it does mean in the short term for us is that our margins are impacted and our revenue goes down. Importantly, we have continued to grow market share. So we are actually seeing increases in market share in key markets such as Jamaica, Guyana, etc. but the revenue per transaction is coming down, and so you see the revenue coming down. And we are taking very deliberate steps to address that, which I'll share with you a little later in this briefing. So what did this mean for our profit before tax? You'll actually see that our profit before tax was down. And this was really primarily due to the impact of Hurricane Melissa in the fourth quarter. Hurricane Melissa, a Category 5 hurricane, the strongest in Jamaica's recorded history and the third strongest in the world, had a significant impact on the country. And we, as a result of that, saw increased insurance claims, as you would expect and as we had shared in November when we had our last investor briefing. So we saw an increase in insurance claims, and that accounted for a significant portion of this reduction. We also had our meats factory, which is a profitable factory for us in Westmoreland, that had to be closed as a result of fairly extensive damage to that facility. The very good news is that these are one-time impacts. The elevated level of insurance claims we would not expect to be repeated. And I'm very pleased to announce that we were able to reopen our meats factory at the end of December. So our meats factory is up and running and has been for January and February. And of course, we're already seeing the improvement there. So the good news is your Vienna sausages are back on the shelf. Your Frankfurters are back in the freezers at your favorite supermarket, being high-low. And so the factory is up and running, and we don't expect a repeat of this. If you adjust for those one-time impacts of Hurricane Melissa, which accounted for about $1.4 billion impact on our profit, you will see that there would have been a much smaller decline of just over 5%. And what is causing that? As we had reported in earlier quarters, we have seen our money services business, and we shared with the revenue, having declining margins and tightening margins. And so a big part of that is our money services business. Also, earlier in the year, we saw increased logistics and supply chain and warehousing costs, which impacted our food business. Pleased to say that that was corrected by the end of the second into third quarter. And so I'll share with you soon our fourth quarter standalone results, and you'll see that we saw the turnaround in that. And then finally, as Andrew will share more, we saw an increase in the provision for credit losses in our investments business. So those were the three primary things that outside of the impact of Melissa would have impacted our results. What does this mean for our profit inside and outside of Jamaica? Well, it shows that our profits outside of Jamaica actually, for the first time, has exceeded 50%. So our profits earned outside of Jamaica was 51%. Now, keep in mind that this is really because of the one-off impact of Hurricane Melissa, which was all in Jamaica. That $1.4 billion impact was in Jamaica alone, and therefore, if we normalize for that, then we will see that our profits earned outside Jamaica was 45%. So not over the 50 mark on a normalized basis, but still up versus the 41% that we experienced in 2024, which again reflects the growth in those international markets, as well as our expansion in areas like insurance outside of Jamaica. So net profit attributable to stockholders, that would have seen a similar trajectory to our pre-tax profits, with the adjustment for Hurricane Melissa bringing that down to 5% reduction. Now, what I want to share with you is Q4. If we take Q4 alone, we'll see that we adjusted for Melissa. Outside of the impact of Hurricane Melissa, we actually would have seen profits up for the fourth quarter. So we would have, this is driven by a number of things. One, an acceleration in revenue growth. We saw an acceleration in revenue growth. Two, very disciplined cost management in our money services business. And three, getting control of and eliminating those high logistics costs that we were experiencing in the first half of 2025. So you'll see that for the fourth quarter alone, our revenue grew 8%. This is compared to under 6% up to the end of Q3. So you can see that increased momentum in our revenue growth. And excluding the impact of Melissa, our profits grew 3% in the fourth quarter. This is compared to a decline of 7.7% up to the third quarter. So again, you can see that turnaround, which means the initiatives that we put in place during 2025 have started to take effect, and we'll be taking that momentum into 2026. And Andrew will go into more details on our financials when we get into the segment results. But we're taking some positive momentum as we move into 2026 and we eliminate those one-off impacts. So let's talk a little bit about what generated those financial results, our business highlights for 2025. We continue to focus on accelerating our revenue growth by growing our Grace and Grace-owned brands. Last year, this time when I was speaking to you, I shared with you that innovation would be a key driver of our strategy going forward. And in fact, that has been delivered. So I would have shared with you in a previous investor briefing about our green seasoning. And this was our latest innovation, and this continues to do very well. But I'm excited to share with you another innovation, which is our sparkling TR. Now, most of you know Tropical Rhythms, the greatest and best fruit drink juice, and all of you enjoy it. We now have TR as a sparkling juice in a can. So sparkling TR, it's on your shelves in your favorite supermarket. So go and try our sparkling TR. Very excited about this product, and we know that it's going to do well. You'll see on the screen products like Grace Basmati Rice. Also, our Caribbean Choice. Caribbean Choice has been doing very well for us. It has shown high double-digit growth in 2025, continuing a trend of high double-digit growth in the prior years. And we have continued to expand the product portfolio, which is driving a lot of that growth. Delivering great value for our consumers, so look out as well for our Caribbean Choice brand, which continues to do well. Our Grace and Lafayette brands have also been growing well in our US market, and we continue to see the expansion of those products. A big part of the driver of our strong growth in both the US and the UK is really our channel expansion. We have been penetrating all the key multiples and all the key chains in these businesses. You'll see a number of them listed there. Giant, Walmart, and a number of Kroger's is another one that we have been growing in very aggressively. So we continue to see that channel expansion. We have been able to grow our points of sale by over 950 stores in these markets across our three main markets, and we expect that that will continue to deliver growth. In the US, we're also moving, not just penetrating deeper in our existing chains, but moving into new markets, such as Georgia is one of those markets where we're seeing good growth, and New England. So we continue both geographic expansion. In Canada, we are moving towards Western Canada, and that has already been showing strong traction. So we expect to see continued growth of our Grace and Grace-owned brands in both our local and our international markets. On the financial services side, we are also seeing accelerated revenue growth. Very pleased with the performance of First Global Bank, which saw double-digit growth in both our loan portfolio and in our deposit portfolio. So that business continues to drive growth as we continue to meet the needs of our banking clients. Our credit card business also doing well for First Global Bank. I had said to you last year that we would be expanding our relationship with Scotia. So our Scotia partnership in Jamaica in our GK General Insurance business actually delivered over 50% growth last year, and we're taking that partnership to 3 new markets: the Bahamas, Barbados, and Turks and Caicos. We have already done so. These markets were launched in November of last year, and already the signs are very positive that these markets will do very well for us in terms of our general insurance business. So very pleased to be expanding the Scotia relationship into these new markets around the Caribbean. Mergers and acquisitions. Again, we have indicated that M&A continues to be a key part of our strategy, and we have delivered that in 2025 and into 2026. At the end of last year, we would have announced the acquisition of Dairy Industries, the 50% stake previously held by Fonterra. We closed that transaction in January of this year. Very excited about that acquisition. It allows us the opportunity to focus on where we are strong, which is our brand building and innovation and distribution. And for Fonterra, who continues to be our partner in that business as our primary supplier, to focus on their key core area, which is really raw materials and ingredients. So a transaction that we're very pleased with, and there are a number of reasons. Our dairy plant continues to be one of the very profitable manufacturing facilities that we have. But importantly as well, this business is helping us to drive our export growth. So if you look over the last 6 years, we have more than doubled our export revenue in dairy industries. And exports now account for about 25% or just over 25% of the revenue of dairy. So that continues to be an area that we're going to be able to grow in. And then what's very exciting for me is the innovation that we have been able to bring out of dairy. Last year at this time, I introduced to you our Easy Open cheese can. I know it's Easter time now, so I want you to see that this continues to do very well. Our consumers have responded very well to it, and it is now much more widely available. So those who love the can, they are still going to enjoy the challenges of opening it, and those who want the Easy Open have the Easy Open access. But most exciting, breaking news is our new cheese sauce. This is not yet on the market, so you're hearing it for the first time here at our investor briefing, that we are launching our new tasty cheese sauce. And so this cheese sauce, easy open cap and easy to spread. You just spray it out. You can use it on hot dogs. You can use it on your loaded fries, nachos. If you're like my family and have Taco Tuesdays, you can have it with your tacos. Look out for this with the Hot Dog King at Champs. I know everybody's getting excited about Champs. So we'll be having this for the first time at our Champs launch. And you'll see this product with our Hot Dog King at Champs. So the innovation continues to come out of our dairy business, and I think you guys are going to love that new product. Key Insurance was another acquisition that we completed, taking that business private. So we have now delisted Key from the Jamaica Stock Exchange, and we control that entity with just over 98% of the shares in that business. This opens up great possibilities for synergies between Key Insurance and GK General Insurance, both insurance companies. We continue to keep both brands because we think both brands have a place to play in the market. So you will continue to see both GK General Insurance and Key Insurance in the market, attacking different segments of the market. But in the back office, we have great opportunities for synergies to drive improved profitability. And then finally, on the M&A front, we acquired the remaining 30% of Catherine Speak, and so we now own that business 100%. GK1, again, last year, this time, we promised you the expansion of GK1 into new markets. Very pleased to advise that we did launch in Guyana, and we are partnering with Mobile Money Ghana, so we delivered on this promise in 2025. And then earlier this year, we had a soft launch in Cayman, and so the Cayman product now, if you're going on in Cayman and you enter GK1, you'll be able to find and download the app and start using the app. And we're planning a bigger launch later this year. And then Trinidad and Tobago, we expect to launch by Q2. Very well on our way there. So again, delivering on the geographical expansion of GK1, but also on the innovation. We said that there would be new features coming for GK1. And again, we have that long list of new features, really finding ways to meet and exceed our customers' expectations. And I just want to share one or two of them with you that I find quite exciting. So the GK1 Marketplace. So the Marketplace really goes beyond GraceKennedy services. It means that you can find services globally right here at your GK1 app. And you will see a number of them there listed, Amazon, Shein, a number of them. And the one I want to highlight for you, though, is our events tab in the GK1 app. This means now for your favorite events, whether sporting events, the theater, whatever it is, you can go to the GK1 app and you can purchase your tickets. In fact, your Champs tickets are available now via the GK1 app. So all of you who are looking to buy your Champs tickets, you can go to your GK1 app, go to the events tab, and you are able to buy your Champs tickets. This is a big area that we expect to continue to grow as we partner with ticket events providers around the country and the region so that you can purchase your tickets in one place. The other exciting one I'd share with you is our crowdfunding. And you will see there that as we lead up to Champs, there's an opportunity for you to go in and support your school. So you can go into the app and you can easily donate towards your school in preparation for Champs or to any other, Melissa, their recovery. And so this app, again, has gotten good traction, or GK1 app crowdfunding tab. So again, I encourage you, and you see the list of schools there. If your school isn't there, get in touch with us. We're happy to expand it to your school as well. So the point is we continue to innovate with the GK1 app, and what we're really doing is creating an ecosystem where everything and anything you need to do, whether it's within the GK group or even outside of the GK group, you can come to that one app for it. Our app continues to be the leading app, or our wallet continues to be the leading wallet in Jamaica, and so we continue to be very excited about the potential and the power of this GK1 app. GKMS, I spoke about the fact that the money services business is changing rapidly as the global environment for remittances changes. And this is how we're addressing it, twofold. One, we're optimizing our agent network, which means that we're looking for new ways to reach our customers. So we're partnering with existing networks such as Court Stores, CNWJ, and our own high-low stores. And that will allow us to deliver this service in a much more efficient way. And that is growing significantly. We're seeing double-digit growth in all of those partnership areas. I had advised of High-Low Barbican, where we piloted the new lane where you'll actually be able to go, just like you're going and buying your groceries, you'll have a lane that you can go and get your remittances, and then you can buy your groceries at the same time. And we'll be rolling that out to a number of stores, both within the high-low chain and outside of the high-low chain. The other area which is extremely, extremely important in this business is digital. Digital is where the future is, and the future is now. In fact, for the first time globally during 2025, we saw digital transactions. This is not limited to money services or Western Union. This is globally for remittances. We saw digital transactions exceeding cash transactions. So that is the direction. Now, I'm very pleased to say that we are well positioned for this. We have been growing our digital business. In fact, our digital business grew by over 50% in 2025. I think if you remember last year, I was telling you growing at over 40%. Well, that was for 2024. Well, in 2025, it grew at over 50%. So our digital business is doing well. Now, with digital, it means you have to invest at first. So there's a significant investment that we're placing in digital, but we know that that's going to pay off, because when we see this type of scaling that we're getting in the digital business, where digital now accounts for double digits in our remittance business, and it's still well below the global average, so we still have a long runway to go, then we know that that is the right strategy. So our GKMS business model, we are transforming that business. It's not an overnight transformation, but we're seeing that we're moving in the right direction. Logistics and supply chain, key for us in making sure we remain competitive in this business. And as we said last year, we needed to drive exports and increase our competitiveness. I'm very happy to say that we had our inaugural export of frozen products to Guyana in 2025. Very happy that the minister was able to be there. So you'll see our frankfurters, our hams, etc. We have now started exporting frankfurters, hams, and other frozen products to Guyana. And Guyana is doing very well for us generally, not just in frozen products. We also expanded the number of markets that we offer our Catherine Speak and 876 water. 4 new markets, so we now have 5 markets outside of Jamaica that we are exporting to. And we saw water growth in terms of exports growing by over 65% in 2025. Very importantly, we continue, because of the growth in our business, to expand our distribution center. We have our newly commissioned refrigeration plant, which means increased efficiency and also ensuring that we meet all the food safety and quality standards. And we have commenced construction of our 25,000 square feet temperature-controlled warehouse, which now will free up even more ambient space for the growth that we continue to see and continue to expect going into 2026. As we grow the top line, we have to make sure it's falling to the bottom line. So operational efficiency is key. An important element of that is technology. We had shared with you the investment of over $7 million in our new IT platform for the foods business of S4HANA. This is an upgrade from our SAP to S4HANA. And we continue to use that to really drive the way we access data, get real-time information, improve our level of automation, and make ourselves more efficient. We've been able to eliminate a number of other systems because this system now is all in one, and that too has reduced our cost. Energy. As a manufacturer, as a retailer, energy is a big cost for us. So we're very pleased with the energy roadmap that we had set out a few years ago. We continue on that roadmap, delivering over $700,000 in savings for 2025. And in fact, it would have been more, except that our plant, our solar plant at Meats, was also destroyed by Hurricane Melissa. And so we'll be rebuilding that and getting back on track to meeting that over $1 million savings that we had advised. So that might be put off a little because of the destruction of the solar plant by the hurricane, but we see the savings, so we're not daunted, and we will be rebuilding bigger and better. None of this happens without our people and a culture that drives this level of innovation and engagement. So we continue to focus on that. Succession management is key. We have to be developing leaders. We have a number of development programs that continue to recruit new team members, 105 emerging and senior leaders participating from across the group at all different levels of leadership. So we continue to invest in our people. But importantly, we continue to drive our team experience and culture. Very proud of our netball team. You'll see them there on the screen. They were champions at the Inter-House Netball competition. And so very, very pleased to be able to boast about that this year. And we know we're going to be winning more in the years to come. Also, our Nalcan factory were winners at Sports Day. Our annual Sports Day is one of the great events on our calendar and really brings out the team to compete in a friendly environment. So congrats, Nalcan. When we do this, we don't just do it only for the bottom line, as important as that is, but we also do it because we care. And we do it so that we can give back to the communities that have given so much to GraceKennedy. As we have always said, what is good for Jamaica is good for GraceKennedy. And so we continue through our foundations to support our We Care ethos. You know, you have heard about our grants and bursaries and all of that for many years. I want to share what we're doing in STEM, because we believe that a clear understanding among our people of science and technology is critical and crucial for the future of the country. So we have a STEM center. We've had it for many years. And in 2025 alone, we introduced 344 students, really from very poor backgrounds, inner city communities, to coding using a software called Microbit. You'll see myself and the minister there. We were happily coding as well, so we're learning it as well. But it is the future, and so we're very excited about that. And you'll see a number of the students there very engaged around learning about STEM. The other area that as a country we need to make sure we're focused on is mental health, especially with the events that we have seen. And so mental health continues to be an area that we focus on through our counseling services. And we actually get involved ourselves as members of the GraceKennedy team. So we have 74 mentees matched with GK employees who are mentoring these young people from the inner city. Very proud of these programs. Our GraceKennedy Foundation has been doing tremendous work, especially in the area of environment and the protection of the environment. 5 million kilograms of waste removed. We have installed another barrier at the mouth of the gully to prevent the waste from going into the harbor. But most importantly, for this to be sustainable, we need to start teaching our children and our communities about the importance of managing waste properly. So we have been able to engage over 900 students, over 1,000 community members to explain to them why this is important. And our foundation and the work we're doing has really gone global. We're very excited about being featured on CBS through their Visionaries program, and I think it's really just a reflection of the tremendous work that the foundation is doing. So very proud of the work being done there. Can't speak about We Care without speaking about Hurricane Melissa. It was very important for us that as a group, we participated in our national recovery for Jamaica when we saw the devastation brought on by Hurricane Melissa. First of all, we needed to account for our own team members. I'm very pleased to say that all of our team members were accounted for, and we were able to support them in getting back on their feet as quickly as possible. But as I went around the island in the days following the hurricane, I must say that I was particularly moved by our team members who came out day after day, despite their own challenges. And when asked about that, they said we needed to support the community. So they were out at work supporting the community because we needed to get the community back on our feet. So I want to say a special thank you to the GraceKennedy team that really delivered over and above during Hurricane Melissa. As a company, we were able to work with our partners to deliver a relief program worth over $200 million. And this is not a program that just comes in the days and weeks following the hurricane. This is a program that continues. In fact, you'll see I highlight there our donation, which was just made last week to the Minister of Health. Very happy that the Minister is able to join us, and we're able to hand over $11 million worth of hygiene and personal products coming out of our partnership with P&G, who we represent here in Jamaica. Of course, care packages, over 5,000 of that. Last year, we spoke about the $20 million food donation that we gave to the Minister, Colonel Charles Jr. And so we continue. Education is another area. In that graph, in that diagram, you see where we're making a donation to pay for the CSEC and other school fees for students in the West impacted to make sure that they could do their examinations. So the point is we have a multi-pillar approach: food, cash availability, wealth and health and wellness, and education. And we continue to drive that and to support our communities as they recover from Hurricane Melissa. So I think one of the things that would show you is that we live in an extremely, extremely dynamic world where things are changing very rapidly. And as an executive team, we are very clear that we need to be deliberate about shaping the future of the GraceKennedy Group. So there are all of these things changing around the world. We can't just allow the future to happen to us. We have to design the future. And so how do we do that? One, we need to be very clear in understanding what those factors are that are changing in the world. And then we focus very carefully on the things that we have control over. Because most of the things we do not have control over. We need to understand them. We need to understand how we adjust and adapt our business to them, but we don't have control over them. What we do have control over is where we spend our time once we fully understand the environment. So when we talk about this environment that's rapidly changing, what are we talking about? You know them. Geopolitical shifts. We're probably in one of the most heightened geopolitical environments that we have seen in our lifetime. What does that mean? It has implications for migration patterns. It has implications for supply chains. The trade environment is changing. That has implications for the cost of goods and the cost of moving goods around. It has implications for timeliness of being able to get goods. It has frictions in trade. We're talking about unprecedented events like climate change. That has implications for how we plan for business continuity and make sure that our businesses can get up and running after disaster very quickly. We spoke about the remittance landscape. We've spoken about artificial intelligence. So there's a lot of change. But when we see this, as an executive, as a Grace Kennedy Group, we see opportunity. We see opportunity in the midst of this change because our focus is on the things that we have control over. So what are those? One, improving our productivity and efficiency. We are attacking the whole issue of technology to drive greater productivity and efficiency. How can we create frictionless products and services? All these changes are creating frictions in the way products move around the world, services are offered. If we can create frictionless products and services, borderless products and services, then we will have a competitive advantage. Data, in a dynamic world like this, if we can use data and optimize that data to make decisions faster than the other person, then we have a competitive advantage. Partnerships are key in an environment like this, and we have seen the benefit of partnerships for our business. So how do we expand on those? And of course, risk mitigation, very, very important. Strong governance, strong leadership, strong risk management. So with that in mind, we have developed our vision and our purpose to be the #1 Caribbean brand in the world, and our purpose, enriching lives through trusted food and financial services. And to drive that vision, we have 4 key strategic pillars: consumer centricity and innovation, operational excellence, purpose-driven organization, and sustainability. Innovation continues to be key. We continue to invest behind our brands, and we continue to see how we can leverage our brand equity and technology to design new products and services that not only meet but exceed our customers' and consumers' expectations. Operational excellence, digital transformation, the use of technology to become more productive, to deliver more with less, critical at this time, backed by strong governance and risk management. And then all of this can't happen unless we have the right people and the right culture. So we continue to invest behind our people. And we have to do this not just thinking about today or even next month or even next year. We have to think about the future because we see the world changing so rapidly. All of this underpinned by our core values. So I want to tell you a little bit about what you can expect from your group in 2026. And how does this 2026 strategy tie in with those strategic pillars? Our theme for this year, we are Grace Kennedy, shaping a stronger future together. We are Grace Kennedy, we're building on a strong, solid 104-year legacy, but we're also being very deliberate about the future and how we design that future to meet our strategic objectives. Most importantly, we're doing it together. And we're doing that because we have found and we have proven as a group that the power of togetherness is a force stronger than any hurricane. And so we're able to withstand whatever of those hurricanes, whether it's the geopolitical shifts, whether it's a Melissa, whether it's trade imbalances, we're able to withstand it as a result of togetherness. So I want to start with our first strategic pillar and share with you what you can expect from us in 2026. Consumer centricity and innovation. We're going to continue innovating. I can't show you the pictures of the new products, can't give away that information too early, but again, as we did in 2025, you're going to be seeing us coming up with new products that meet the needs of our consumers. The green seasoning that I introduced last year for Jamaica, we're going to be expanding that in 2026 into our international markets. It's done well here, and we believe it can do well in our international markets. And that's a sign of something that we're also seeing with our products and we're being very deliberate about, which is our multicultural strategy. We see the opportunity for some of our products to really cross over into markets that want to experience new and different ethnic foods. And we're seeing that happening. We talk about our honey jerk seasoning doing very well, and it's not just Jamaicans. This green seasoning is not going to just be targeted at Jamaicans in the diaspora. So we know that these products can do well in a multicultural market. We want to continue expanding our high-low network. We would have mentioned that our Montego Bay Fairview store was also damaged by Hurricane Melissa. We have our Church Street store, which was opened in a few days after. But Fairview, we are taking the time to now reimagine Montego Bay Fairview and come back bigger and better. So we're going to be coming back later in the year with our Fairview store and you're going to be very excited, our friends and family in Montego Bay. Also, we're looking at the white spaces and how we can continue to expand our high-low network. M&A, very important, and we expect to be able to deliver more on that in 2026. Launching new digital solutions, very important. I'll just share one of them with you, which is in our bank. We are well under our way, already getting regulatory approval for our digital onboarding and loan automation. And so this is going to mean that you can stay at home. You don't have to come into the bank and sign up a lot of forms and a lot of paper and know how painful it is. And so we're going to make it easy for you, where you'll be able to go onto your GK1 device or onto your computer and open your savings accounts, apply for loans, apply for credit cards, and the turnaround will be very quick. And then we want to really grow our asset management business, and we see opportunities for that in 2026. Operational excellence, that continues to be key, and we have to find a way, and we are well on our way with artificial intelligence. We have the governance structure in place. We are going through a series now of use cases and actually seeing where we can apply artificial intelligence in areas like fraud detection, in those repeatable processes that we can free up our people to be doing more value-added work. And so you'll see that I'm there talking to a computer. And yes, the computer did answer me and knew what I was saying. So, you know, it's an interesting world we live in. But artificial intelligence, we do see it playing a key role in the future and in the future of the GraceKennedy Group. Our structure and processes have to be aligned with our strategic direction. And so there are a number of process improvement exercises going across the group where we're asking ourselves, why do we do it this way? How can we do it differently? And again, you're going to see that paying off, both in a reduction in time in the activities that we do, and also in allowing our people to spend time on the key value-added activities. We have invested a lot in technology over the years, and now we're focusing on making sure that they are delivering the benefits from that technology. S/4HANA is just one example of that. We've been able to close out a number of softwares, reducing our costs, and really focusing on the technology that we think is going to move the needle. And finally, strengthening our governance and risk management. We did very well coming out of Hurricane Melissa. Our business continuity plan did extremely well. We were up in our distribution center the very day after the hurricane. A number of our high-low stores opened the very day. And in a few days, we were opened across the group. But we cannot be complacent. And so we are running scenarios now and really testing all aspects of our business continuity to make sure we are ready for any eventuality. A purpose-driven organization, and as I said, this really speaks to our people. So continued focus on employee engagement and driving that and really developing our people, in particular our future leaders, but also strategic workforce planning. I want to highlight that because this is really looking at our strategic objectives and then aligning our people strategy to those strategic objectives in terms of the skill sets we need, in terms of the mindsets that we need, in terms of the resources, in terms of where people are and how people work. All of these are going to be structured in a very strategic way to fully align with our growth objectives. And then sustainability. We need our team members to embed sustainability in their job functions. It's the way we work. We need sustainability to be a part of how we assess risks and assess any initiative, any strategic initiative that we're undertaking. Cybersecurity and data privacy, very scary world out there today. You're talking about deep fakes, you're talking about constant attacks on our network. We have to be ahead of the hackers, and so we're investing a lot behind that. And making sure as a global company that we're meeting the needs and expectations of our international partners and stakeholders. So we have been around for 104 years. We're going to be around for more than 104 years in the future because we're focused on sustainability. So investors, media, friends, all, I want to share with you that 104-year legacy and that 104-year future is really built on these core values. Yes, strategy is important, yet our financial planning is important. But what will ensure that we are around 404 more years is these 6 core values, which will not change and continue to be honesty, integrity, trust, commitment, humility, and respect. You can count on those as the core values of GraceKennedy. So as we go through this year, I want to leave you with our theme. We are GraceKennedy, shaping a stronger future together. And what does that stronger future look like? It looks like a united team, which stands for togetherness, excellence, accountability, and mettle. Mettle meaning that we're going to take some bold decisions, and because we have a united team, we're going to be able to deliver excellently, hold ourselves accountable, and continue to grow our business strategically. Thank you very much. I'm going to hand over to our Group CFO, Mr. Andrew Mesaro, to take you through more details on the financials. Andrew?
Thank you, Frank, and good afternoon, everyone. Just trying to test the technology. Okay, thank you, sir. All right, so firstly, in terms of our key performance indicators, you'll note that we did have a mixed performance for 2025. The main highlight is revenue, showing $177.8 billion for the group, and that's just over $10.7 billion growth, or 6.4%. Now, in terms of our profit from operations, which is really kind of operating performance, you'll note that stood at $10.2 billion, which is a decline of 18.7%. I'll go into a little bit more detail around the operating performance when we talk about our segment results. In terms of profit before tax, it stood at $10.3 billion, a reduction here of 16.7%. And you heard earlier, we talked about the impact of Hurricane Melissa, and therefore that would have affected our profits for the full year, even though it would have happened in the fourth quarter of 2025. And then our profit attributable to shareholders, this is really the profits that are earned by the shareholders of GraceKennedy. That's down 18% to $6.9 billion. Now, our asset position did show good improvement, and so we see assets growing by almost $30 billion, going up by 12.7% to $266.6 billion. And the quality of the assets continued to be strong, so we saw good growth in our cash and deposits, as well as our loans receivable portfolio, which is the growth in the banking customers. So we're very happy about the growth in our asset base. And that also translates to growth in our stockholders' equity. So the group showed improvements in our equity position by 6.8%, now at $92.9 billion. And what we saw is that by this strong capital base, we are able to be flexible, we are able to pay dividends, and we're also able to reinvest in the business. So in terms of dividends, I wanted to give you a little bit of update on that. And you'll see that over the past few years, and certainly in our history, we've been very consistent in terms of paying dividends. And for 2025, we're able to maintain our dividend payout at $2.35 billion, even though profits did show a dip compared to the prior year. And that's really because we have a strong equity base, as well as good cash flow, and our cash and deposits remains in a good and positive position. And so we are able to consistently pay out dividends throughout the years. And to mark that as well, for our first interim payment for 2026, we are going to be paying a dividend of 55 cents per stock unit on the 9th of April. And this is just over $540 million. So shareholders can look out for that first interim payment for 2026. So I'm going to go a little bit into more details around the segment performance. I had mentioned earlier that revenue showed good growth, growing by $10.7 billion. And you'll see that most of our segments showed growth in revenue, with the exception of money services. Frank had spoken a bit about money services earlier in terms of the revenue pressures and the fact that transactions, the transaction prices have gone down a bit, which would have impacted revenue. Now, what we saw for the other segments, for insurance, that's up 17.3%, and banking up 4.1%. So overall, what we saw is revenues actually grew for the financial group by over $2 billion. And that growth in revenue would have come mainly from insurance, but also from our banking subsidiaries. So for insurance, what I'd say about that is the general insurance portfolio performed the strongest in terms of growth in revenue. Or GK General Insurance subsidiary, as well as Key Insurance, and our insurance company in the Eastern Caribbean, all showed growth in revenue, both in our motor and on our property insurance business. And then we saw growth also for health and life portfolio within insurance, and our insurance brokerage showed growth as well. So insurance, we're very happy about the investments we were making. You will recall that we had acquired Key Insurance, firstly, the first tranche back in 2020, and then in 2025, we had bought almost the full remaining shareholdings of the company. We hold 98.9% of Key Insurance now, and that's paying dividends, as you can see. And in addition to that, over the last 3 years, we've bought a number of former Scotia companies within the life business and renamed them GK Life, and those companies also contributing to the growth in revenue. On the banking investment side, you'll see it's at 4.1%. We did see strong growth for First Global Bank in particular. Its loan portfolio grew by double digits, and also we saw its other income sources, including fees, growing as well. However, on the investment side, we did see where the equity markets were fairly soft for 2025. You didn't see very many IPOs occurring, and stock prices were somewhat muted on the exchange. So this would have impacted our fee-based income, as well as the stockbroking side of the business. So that's why the investment side of the business didn't perform as strongly. In terms of our food trading, we did see very good growth on the international side of the business. That grew just shy of 10%, 9.9% growth on the international side. All the major markets grew, Canada, USA, UK. And we saw all of our main brands growing. So in the USA, our Grace brand and Lafay brands showed good performance, good growth. In the UK, we saw strong growth for the Grace brand as well. Our Duns River brand and the Nourishment all did well in the UK. And then for Canada, we saw our Grace brands, a number of products under the Grace brand portfolio growing in Canada. Locally, we would have been affected by Hurricane Melissa, especially in the fourth quarter. As you had heard earlier, one of our supermarkets, our high-low supermarkets in Mobay, the Fairview location, would have been shut down since COVID. sorry, since Hurricane Melissa. And then you'd also have seen that for our meat plant, it would have been down for a couple of months as well. It was able to reopen at the end of December and is now in production again. However, it would have been impacted in the last quarter of 2025. Now, even with those impacts from Hurricane Melissa, we did see growth in the domestic food business, but not as much as it would have been had that event not occurred. If I then go to the profit performance, you'll note that our segments show reductions for 2025. And really, a big part of that is because of Hurricane Melissa, especially on the food side of the business, but also on the insurance side of the business. And so money services mainly is an impact from the revenue declines that I had spoken about earlier. We did see in some markets that transaction volumes were under pressure. And we did see for some of our markets as well, we'd have invested more in technology and there would be some additional technology costs, especially as we move to the digital, providing digital remittance products. On the insurance side, you see a 30% decline. Now, without Hurricane Melissa, this would actually have shown growth. So on a normalized basis, the insurance segment would be up in profitability. And then on the banking and investments, as I had mentioned before, it's mainly as a result of our investment portfolio, softer kind of revenue translating down onto the profit line for the investment side of the business, some reductions in the fair value of our equity instruments, as well as additional credit losses being provided for. But on the banking side, we did see good growth and profitability improved for both First Global Bank and our merchant bank in Barbados, Signia Globe Financial. For food business, again, mainly affected by the hurricane in the domestic market. You would have also heard from Frank earlier, we did have some additional warehouse and logistics costs around the first half of 2025, which was dealt with. However, the impact was felt for the first 2 quarters of 2025 in that area. On the international side, though, we saw very good growth. All our international food businesses showed improved profitability, led by the UK and USA. Canada also did very well, and then we also had growth in profitability for Belize and our Latin American business as well. So overall, we're seeing that, if you were to take out those kind of one-off expenses, whether it was Hurricane Melissa related, the closure of our meat plant and high-low supermarkets, other impacts like logistics costs, we would have been in a better place, and we do anticipate recovery going into this year. And I think those are the highlights that I'd like to mention for the results. Thank you.
Thank you very much, Andrew, for that comprehensive presentation on our segment results. The floor is now open for questions. So by way of a reminder, we will be taking questions via email, and I just want to remind you of that email address. It's gkinvestor@gkco.com, gkinvestor@gkco.com. And you may also send a text to our communications team at 876-809-1121 or 876-537-1950. Okay, and we have already started getting some questions, so thank you very much. First question. My question is, how will the recent special consumption tax on sweetened beverages impact GK? All right, very timely and relevant question. Certainly, we do have beverages in our portfolio, so any tax on those would impact the pricing on the beverages. What we have been doing at GraceKennedy for many years now, long before any special consumption tax, is looking at opportunities to reduce sugar where it is possible while maintaining flavor and quality for consumers. So we are mindful of the government's drive around health, and so we have been doing that already. What I would certainly encourage is that the special consumption tax be structured in a way that encourages reformulation like that, that encourages us to reformulate products to lower the sugar. The way it is structured today doesn't really drive that because there isn't a differential tax depending on the level of sugar. So I think that is something that would drive the behavior that we want as we are mindful of the health considerations. And as I said, we are already on that path for many years, not just in terms of beverages, but in terms of a number of products across the group where we are offering better for you options, as we call them, for our consumers to have the choice for those options. All right, the other question, how soon can investors expect margins to recover to historical levels? Well, I'm very glad you asked that question because as I showed in our fourth quarter, we already saw a return to growth in profitability. So that momentum we expect to carry forward into 2026. And as I said, that is adjusted for the one-time impact of Melissa. So when we adjust for that, an example of that is our food business. Our food business would have been showing growth of about 8% or more if we adjusted for the impact when you take the fourth quarter alone. So already we're seeing the momentum in the fourth quarter, which we'll be taking into 2026. And so we expect to see significant improvement in 2026. All right, Andrew, I think this one is for you. It says trade and premium receivables increased significantly year over year, while loss rates across the provisioning matrix declined in all aging buckets, including balances over 3 months past due. What specifically drove the growth in gross trade and premium receivables in 2025? Does this reflect higher volumes, changes in customer mix, or extended credit terms?
Thanks for that question. There are a number of factors that resulted from this. The first one I'd say, generally, in terms of why that line would have gone up, is the reinsurance recoverable from our reinsurance companies. So because of Hurricane Melissa, a lot of our portfolio, we don't take the full hit from claims from our customers. Instead, we would reinsure with companies outside of the region to back those insurance claims. And therefore, what we had at the end of 2025 is an amounts owing from the reinsurers to our insurance companies in order to settle those claims. So we retain a percentage, but the majority of those claims will be backed by the reinsurance company. So you'll see an amount there in receivables for reinsurance contract assets, which are the recoverables. Now, in addition to that, when our customers were affected in the West, in particular towards the end of last year, you would also have seen where some of the customers wouldn't have been able to pay right away because they would have been also impacted in terms of closed down for a few weeks. And so we were able to offer some extended credit to our customers, and so we allowed them to be on payment terms. We have seen for the first 2 months of this year quite an improvement in terms of the payments being made by these customers. So that's improving now. And then, in addition, we would have had customers who would have borrowed from our bank in terms of some of the hotels some of the businesses there, and we would have given some payment terms to settle those outstanding payments as well. So that's why you see some increases there. But we do monitor it very closely. It's monitored on a customer-by-customer basis, and we're in constant contact with the customers to ensure that we understand how their cash flows will operate and how they can repay us over time.
All right, thanks very much, Andrew. While you're on the floor and speaking about cash flows, the next question says, operating cash flow dropped from 18 billion to 15.25 billion. How much of this was driven by insurance claim payments and fulfillment cash flow movements versus slower collections in the foods or financial services portfolios?
Okay, thanks for that. In terms of the operating cash flows, the three biggest impacts or movements on that line have to do with receivables, payables, and then loans receivable. So on the receivables and payables side, they are tied to the insurance claims, because on the payable side, our insurance company would owe customers for the insurance claims that have been made. And on the receivable side, we would have a reinsurance recoverable from our reinsurance companies. So those kind of more or less offset, I would say. And what is really left is that we had significant increases in loan disbursements to customers. So we have utilized those cash flows to lend to customers. So it's not really a bad thing. You'll see a reduction in operating cash flows, but it's being put to more productive use. Rather than keeping it in our cash reserves, we have now lent it out to our customers. So that, I would say, is the most significant reason why you'll see a reduction in operating cash flows.
All right, thanks, Andrew. 2025 saw a swing to 2.9 billion in net reinsurance income. Should investors treat this as a one-off shock absorber for Hurricane Melissa, or does management expect more volatile reinsurance outcomes given IFRS 17 discount rate movements and reinsurance contract repricing? I'll start and hand over to Andrew on the IFRS 17. Yes, so the swing you're seeing is largely impacted by Hurricane Melissa. As we said, that has a big impact, and that's really because we are recovering from the reinsurers, which is a very positive thing. I must say that our reinsurance stood up extremely well to the hurricane. So we were able to recover and mitigate any significant impact on our insurance companies. Yes, you would say the dip in profits, but both insurance companies, both GK General and Key Insurance, remained profitable for 2025. And I think that shows the strength of the reinsurance. We use strictly A-rated reinsurers. And the strength of the reinsurance that we had in place meant that even after a Category 5 largest in history hurricane hitting Jamaica, we were able to show profits for both our insurance businesses. So yes, that swing that you're seeing in the notes to the financials would be largely driven by Hurricane Melissa. We have not seen any major repricing as yet. That's something that we keep an eye on, and we keep in very close contacts with our reinsurers. But the truth is, reinsurers look on the market as a global village, right? These are large global reinsurers that we work with. And so one event in Jamaica does not specifically translate that way, but it could have an impact. So it's something we're watching and managing very carefully, but right now we're not seeing major repricing as yet. Andrew, IFRS 17.
Thanks. This is really asking if there'll be more volatility on the reinsurance side because of IFRS 17 and how it deals with discounting and using a discount rate. And I would say not particularly. We don't expect volatility to be increased solely because of this. Yes, if we see interest rates move significantly in the market, that could be a factor. But generally, we've seen stability for discount rates, and so that's not really a major effect that we expect going forward. I think what you're seeing, that kind of swing for for 2025 is more as a result of the hurricane and because we drew down on our reinsurance for that. But you don't normally see that type of swing unless there's a kind of external shock that occurs in the market.
All right. Thank you, Andrew. Next question. Ideally, are you looking for a 50-50 mix with your earnings? In other words, half from Jamaica, half from outside. Seems like you can increase your FX earnings through exports. We definitely can increase it through exports, and that's a big growth focus. In fact, we expect that our profits and revenue from outside Jamaica is going to be larger. Not because Jamaica is shrinking by any means. In fact, Jamaica continues to grow, and over the last few years has been growing very well. And so we want to really thank our Jamaican consumers for that. We continue to expect growth. But when you think of just the size of the international markets that we are in and the opportunity for our products to cross over to not just serve the diaspora, but to those who want multicultural experiences. When you think of that potential, then we expect our both revenues and earnings from our international markets to be larger than our Jamaican market. And it really augurs well from the point of view even of risk diversification. So that, we saw the benefit of that this in 2025 with the impact we still on our domestic market, but we still saw our international markets doing very well. Andrew, back to you. Impairment losses rose from 503 million to 838 million in 2025. Which lending categories showed the sharpest migration into stage 2 or stage 3, and what early warning indicators is the group monitoring heading into 2026? Okay,
so on the impairment losses, it's a combination of, I'd say, two areas, but both would relate to the financial sector. In terms of receivables, we did see some of our financial receivables that were affected, and the payments have been slow in that area, and therefore we made provisions on specific amounts outstanding. So I wouldn't say it was a pervasive or widespread impact, but there were some specific receivables that we had to provide for. In addition to that, other than receivables, we would have had some investment securities that we saw some warning signs around, and therefore we made some additional provisions around those investment securities. So I'd say those are the areas. They were more isolated areas and very specific in nature rather than kind of broad-based. As I had mentioned earlier, in terms of Hurricane Melissa, we have been monitoring our customers very closely, both on the trading side for the food businesses, as well as on the financial side on our bank, for our banking business with loans to customers, just to make sure that we understand what's happening within their businesses. So that's kind of the monitoring mechanism that's taking place, but we haven't seen a kind of widespread impact. These provisions are really very concentrated on specific ones.
Great, thank you, Andrew. Another question, your share price could be higher. What can be done to get it up? Well, first, thank you very much. I fully agree with what you're saying. The share price definitely could be higher. And I think a key part of that is really the current state of the market. We have seen where the overall market has been challenged, and we have seen where that has translated into GraceKennedy's share price performance. But we do believe there's a lot more upside. And I think the key to that is really sharing, as we are doing today, with the investing public, the plans for the future of the group, and recognizing that tremendous value and tremendous upside we think will translate to investors making decisions that will see the improvement in the price. Also the general improvement of the stock market. We still have a market that is not as deep as we would like it to be, so you are going to find that when the overall market is down, it impacts the stocks. So we expect that to happen. There are other financial mechanisms that Andrew may want to speak to, but I would say right now we're not looking at those in terms of splits, etc. Andrew, anything you want to say on that?
No, I would say it's a function of how the market sentiment is generally now. But I think if investors do the math, look at the book value as well as the continued profitability of the group, they recognize that there is a lot of upside for GraceKennedy.
Thank you, Andrew. All right, we're getting quite a few questions. So let me just do a time check with the team. Okay, we have another, we should be able to cover these in the next 5 minutes. So the question is, what update can you give on the distribution partnership with Massey Group? That's going well. It's early days yet, but we're pleased with the move towards the Massey Group, and we think that that will continue to drive the growth of our business in that market. So that has been a positive so far, and we continue to monitor that. The Q3 financials detail weakness in the Jamaican operations, in part due to consumer weakness as well as some higher logistics, warehousing, and operating expenses. Is this still being seen, and if yes, when do you expect this to normalize? So thanks for that question. In terms of consumer weakness, we did see some pickup in the fourth quarter, as we showed that the revenue growth for the group actually accelerated in the fourth quarter, moving up to 8% from under 6% up to the third quarter. So we did see that, but it's difficult to disaggregate that between the effects of the immediate aftermath of the hurricane, leading up to the hurricane, and the need for stocks to be refilled, etc. So that will really be tested as we go into the first quarter. And the environment remains a sensitive one because we know that there are still challenges in the western end of the island, but we are seeing good performance from our business, and so we remain very encouraged. Clearly, as the country recovers, and we're really talking about the domestic market here now, because this, as the question said, relates to our Jamaican operations. Clearly, as Jamaica recovers and the West recovers, we will see even greater flows and strengthening in consumer demand. In fact, we must commend the government for the $6.7 billion that is going to be being injected into the economy over the next 3 years. And again, we see that as a very promising sign for the recovery. We saw where, the Bank of Jamaica's actions, PIOJ, etc., showing that we're actually seeing some level of recovery even earlier than anticipated. On the matter of logistics, warehousing, and operating expenses, yes, we have seen a significant improvement in that. So in our fourth quarter, adjusted for Melissa, you would actually have seen our food business showing strong growth in profits in the fourth quarter. Is the breakaway to the Catherine's Peak plant repaired? Okay, so for clarity, this is really about not really the plant, it's really the water, one of our water sources. So we have 3 water sources that are able to ensure that we always have access to your favorite spring water, whether you choose Catherine's Peak or you choose 876. So we have access to water. The Newcastle source, we do not currently have access to it because the road is still impassable. We have been in contact with the relevant agencies. We have not been able to get a specific timeline for when that breakaway will be fixed, but it is not going to affect the availability of water because we have 2 other sources that we are currently using for your spring water, which we have had for a number of years. So we have always used all 3 sources. St. Lucia has stated they are looking to import water. Is this one of the countries the company is looking to expand to? Well, thank you very much for pointing us in this direction. We are looking across the region for countries to export. As I said, we have grown our exports by over 65% for our water business, and we continue to look for those opportunities. So that is certainly one that we will be taking up. All right, where are we with time? 2 minutes. All right, let's see if we have any more questions. Andrew, following the hurricane, was there a need for a capital injection in any of the two general insurance businesses?
So the answer is no, there was no need. Those entities, even with the impact of the claims, the additional insurance claims, both entities were actually profitable for 2025. They have met all their regulatory ratios, and so they're in compliance. And there was no need for any additional capitalization because they remain well capitalized.
Thanks, Andrew. I'll take this one regarding the remittance tax of 1%. Has there been impact on the GKMS business? And if so, how is the company addressing these challenges? So I'm actually very pleased to say that despite initial concerns, and we did have concerns, we have shared them here, we are really not seeing any material impact on this. Or consumers, as we had also said at the time, Jamaicans the diaspora continues to be very loyal in sending remittances to their loved ones in Jamaica, and this has been no different. So we haven't seen a fall off, and in fact, we also believe some of this is because of the digital option that we're offering, which does not attract the tax. And so we, as I shared with you, we have seen digital growing by over 50%. So clearly, our customers in the US or loved ones in the US are using that product more, and that is making sure that they don't get impacted. And so we continue to put out those solutions for our customers, and we want to encourage them to use that digital solution. All right, I think we're nearly there. I have heard about your new WhatsApp Pay option. Please tell us more. So WhatsApp Pay is a great innovation, and when we speak about innovation, it's always important to know it's not just about food innovation, but there's also innovation on the financial services side. So our Bill Express business has actually been doing very well. You would have seen us signing up with Trans-Jamaica Highway recently. And those types of opportunities we continue to look for. WhatsApp Pay is a very convenient way. We have seen the pervasiveness of the use of WhatsApp. So you can now use your WhatsApp to actually pay your bills. And so I think we have the number somewhere here. You can send a message to 876-233-3791 via WhatsApp and pay your bills. So it's a very easy, convenient way to pay your bills. And it's really making bill payment a lot easier. So we want to encourage you to use that WhatsApp Pay feature and give us feedback. Let us know how that is working for you. All right, I think we have covered most of our questions. There are reports in social media that a number of Jamaican products can no longer enter the US because of changes in regulations. How has this impacted GraceKennedy? We are always very on top of regulatory changes, something that we monitor very closely. We really have not seen this as an impact. We make sure that all our food products are compliant, and so this has not affected us. And so we continue to work very closely with our regulatory and compliance teams to make sure that we can get our products to you in our international markets. All right, great. I think the team is now telling me that I've gone over time. Thank you, ladies and gentlemen. This brings today's briefing to an end. I want to say thank you for your time and your participation, and in particular for the questions, which shows your level of engagement and interest in the GraceKennedy Group. As of tomorrow, a link to today's broadcast will be available on our corporate website, www.gracekennedy.com. So that is www.gracekennedy.com. So you can go and see the link to today's broadcast. If you have any additional questions, please submit them to gkinvestor@gkco.com. We always look forward to your questions. We also value your feedback on the streaming experience and any suggestions you may have as to how we can improve the experience for you. Once again, thank you very much for joining us, and we wish for you an outstanding 2026. Thank you.